Welcome back. You're still tuned into Midcap Radar. KFin Technologies reported weak set of Q1 number. Revenue has dipped for the second straight quarter. Margins also are under pressure. We are joined by Sreekanth Nadella, who is the MD and CEO at KFin Technologies, joining us now. Sreekanth, good afternoon. Thank you so much for joining in. But it's the second consecutive quarter of revenue fall that we've seen. It's driven by issuer solutions, international and other investor solutions. The domestic MF business has grown 3% sequentially. What is the outlook going ahead? Do you maintain your guidance that you had shared earlier, 18 to 20% growth in FY26?
Thank you so very much, and good afternoon to one and all. Our line of business always tracks to year-on-year growth and not so much on quarter-on-quarter growth. It's financial services. Typically, in our line of business, Q2, Q3, Q4, are always far more aggressive in terms of the growth as compared to the Q1. So we have seen a good growth in the context of some headwinds that we have seen overall in the markets in the month of April. Markets have picked up subsequently. But an overall revenue growth, over 15.5% and a PAT growth of over 13.5%. August, basically is an indication of a good season ahead of us. If you look at FY25 and FY24 too, the trend is pretty similar, which is basically a Q1 start with a PAT margin of close to about 30%, EBITDA about 41 to 42%, which eventually means it will probably end up anywhere around 43 to 45%, which is pretty much in the line of the guidance that we have.
So you're sticking to your guidance, all of the guidance, earlier revenue guidance you had given in the range of 18 to 20%. The other question is, we want to understand from you, as far as the mutual fund revenue yield is concerned, it's actually dipped on a sequential as well as on a year-on-year basis. What is the reason for that, and can it move up sequentially?
Very good afternoon, Venkatesh. So yes, mutual fund basis yield is a factor of the growth, that has, been witnessed in the industry. If you would recollect, the previous year that had gone by, the overall industry had grown up north of 32-33%. And in line with that growth has been the market intermediary participation entities such as ourselves, we too have grown. What we always look at is a moderated and an average growth over a series of years and not just an individual year, which tends to gravitate towards near about 20% growth. So if we have seen a 30 plus, 32% plus growth previous year, I think it is only reasonable that, a year or so you might see a near about 20%, not a exuberant 30% plus every single year. The basis point yield, is a factor of the telescopic pricing, which is akin to that of any business. Higher the volumes, there is a certain amount of discount that the manufacturer or the outsourcing entity tends to provide and pass back. And we are always very mindful of helping our clients to grow faster than the industry. And it is in that regard that giving any amount of discounts is instead in terms of improving their market position, which will help us to grow eventually in which way.
Okay, all right. So the growth coming in is on a higher base, and that's why it looks lower in comparison to the older years as well. You're awaiting regulatory approvals which have to come by for integration with Ascent Fund Services. When is this likely? What will the impact on P&L be once this approval actually comes by?
About 5 weeks back, we have completed the transaction with Ascent Fund Services. It's a near $150 million transaction to be completed over a 5-year period. We have acquired majority stake. We have already secured all the regulatory approvals in India, which is effectively SEBI, PFRDA, and the RBI. Whilst we have 3 regulators here, given Ascent Fund Services is a global company which has presence in 18 different countries, there are far more number of regulators. The approvals are yet to come from. So in that context, I think we are waiting about 3 different countries, mostly in the Middle East. We expect anything in the next 4 to 6 weeks those approvals to come through. Once that is done, the integration will be completed. From the standpoint of impact on the P&L, the organization is a young organization growing at nearly about 35% year on year on the top line growth. Annualized revenue addition would be roughly about $20 million plus. That is what we would expect to integrate depending upon which month the integration gets completed.
Okay, going forward, will higher growth come in at the expense of more margin pressure? And number 2, what we want to know is that what is the kind of market share that you intend to maintain, given the fact that the growth has been quite strong, especially outside India as well?
So we look at market share, differently from different business lines, right? I mean, so mutual funds is one of our larger business, which gives me about roughly 60% of the market share. Post integration, it will be down, to close to 50%. International business would have then accommodated to be roughly about 25%. Issuer solutions, which is dominantly looking into IPO market and the secondary, market solutioning and services, is about 15%. The remaining is all alternatives, pensions, private retirement schemes, what have you. Our position has been either number one or number two in every one of these business lines. We obviously intend to become the number one in the business lines, where we are number two at this point in time. So broadly, we are objectively looking to create the first large global fund administrator based out of India. That's our vision. And that's a 5-year, vision. And I think the acquisition that we have done and our own organic expansion into 5 different countries, into Malaysia, Philippines, Hong Kong, and Singapore and Thailand, paves way, and provides us the right kind of tailwind that is required for us to achieve that particular goal. Market share, as I said, depending upon which country you move into, we'll
Right.
have the market share there.
Got that point. Thank you so much for joining in today with the outlook going forward and the details on different aspects of business as well. That's KFin for you. We'll address Shriram Finance.